Despite an AI-fueled rally and a workforce shakeup, PayPal stock seems to be stuck in neutral, but is there a hidden opportunity for investors? Let's find out. So we had a viewer request to take a look at PayPal today. We love the suggestions. We're here to keep you informed. So let's get into this one. If we take a look at PayPal's history quickly, from 2020 to July of 2021, the stock experienced a significant surge. But since then, it's dropped by a whopping 80%. That's a yikes. I don't know. What caused this dramatic decline?
So, Lacey, there's a couple of stories going on here, and one's kind of a technical story and one's a fundamental story. I know Thomas is going to show the chart in just a second, but a lot of what happened with PayPal, it's a similar story that you see with a lot of stocks. There was a lot of growth between the middle of 2020 to about the middle of 2021, and that had to do with the explosion of e-commerce. It had to do with the fact that there were a lot of individuals who were turning their passion projects into side hustles and maybe even full-time jobs. And there was much more demand for PayPal and its services. And the stock price went up and it went to record highs. Probably went a little too high and probably got a little bit overvalued. Shouldn't say probably, it definitely did. And what you're seeing now over the last year and a half is you're seeing much more normalized activity for PayPal. The stock price has come down. The question really, I think, that has to be asked is maybe is the stock price come down too much? But I know Thomas wanted to jump in and show you some of the stuff on the chart.
Right. Well, let's look at the chart for a second. Right here, the how the government stimulated this bubble up to this peak, and the market is trying to price in this growth that's never going to end. But then the bubble burst like it did. Stock price falls off. And what we have in here is a lot of analyst sentiment impacting the price action. PayPal is amongst the most downgraded stocks and lowest rated stocks on the MarketBeat platform because of the sustained trend of lowered price targets, lowered sentiment. I believe the analysts are still holding it. They still see some upside, but the trend is still down. Now, technically speaking, I don't really see a bottom here yet. A bottom could form. We've definitely got some high volume days here down in this trading range, but there's no clear bottoming yet. That may start to happen over the next week because we have earnings expected to come out next week. There is a relatively decent expectation for them to perform. That may help get the analysts to start reversing that trend in sentiment.
Okay, so despite the decline, PayPal's revenue and earnings today show slight growth compared to a few years ago. Does this have anything to do with the company diving headfirst into AI enhancements, which, by the way, investors are a little wary about, aren't they?
Right. So to answer your first question, or to answer the first part of what you said, yeah, the curious thing when you look at the stock chart is the stock price is below 2019 levels, but revenue and earnings are above that. Now, I'm not going to say they're astonishingly above that, but they're above that. And so you would expect that would be a bullish note for investors. The fact that maybe the stock is being a little bit undervalued now. I don't think AI is the real story. PayPal's trying to make it a story. They have released several products through not only PayPal, but through Venmo. The problem that analysts are seeing right now is that the products don't seem to be setting PayPal apart. In other words, the products aren't doing something that's unique. It's not something that other companies such as Amazon aren't already doing. So on the one hand, it's probably table stakes. You have to have AI. You have to be able to show that you have that capability, but I'm not sure if it's something that's really going to be driving the stock higher right now.
So PayPal did have a first mover advantage in the payment sector 2 decades ago. But tell us more, how has that advantage kind of since diminished over time, and how is that going to impact their competitive position now? Where are they playing catch up?
Well, I think it's number one is they're playing catch up in AI. And yeah, I mean, 20 years ago, PayPal was kind of thought of in the same way, not exactly the same way, but there were similar sentiments about PayPal as there was to Bitcoin. It just seemed like this weird thing. Why would anybody use PayPal? Why would we be doing peer-to-peer stuff? It's your money safer with the bank. Why are you doing this? Now it's a very accepted way of moving money around. A lot of younger, we're talking Gen Z, that's the only thing they know, and they don't really even, they don't even really have much use for a bank necessarily. But I think there's also a lot more competitors in the space. You see even companies like Visa and Apple and Amazon getting into the buy now, pay later thing. So there's just a lot more competition doing the things that PayPal used to do. Having said that, and in fairness, and I do point this out in my article, PayPal is still the market share leader in the space. So we can't forget that. But there is a lot more competition.
Mm-hmm.
Yeah, right. I think Chris hit on two really good points. And one is just that PayPal has kind of matured into its space. It's the leader in the space. Everybody accepts it. It's mainstream. So the days of wicked growth are over. They're gone. Never going to happen again. At the same time, there's lots of competition. And one of the competitions that I see emerging that may not affect them for another year or two, but will certainly impact their business is Elon Musk and X. Elon Musk is trying to turn Twitter into a multi-platform, including payments and financial services. He started PayPal. He's got lots of experience. So it's very possible that he could disrupt their business. And even if he doesn't, send them packing, he will certainly be able to gain some market share from them.
All right, guys, here is where things get interesting though. PayPal stock is trading relatively cheap, around 16 times forward earnings. What does this mean for potential investors, and why has short interest dropped by 15% recently?
Okay, so let's look at the two parts of that. It's trading at 16 times earnings, and the significance of that for investors, especially for investors who are more value oriented, is PayPal is trading at a discount to where it normally trades, from a historical perspective. And 16 times earnings is more reflective of what Thomas said of a mature company, but at the same time, it's also trading at a value to itself. So that's appealing for investors who are looking to get involved. Short interest was never necessarily that high from a total share basis, but it has dropped 15% in the last month. And that could also be something where if PayPal does report strong earnings on February 7th, then at least retail investors aren't having to overcome the shorts there. There's a little bit more room for shares to grow.
Yeah. I don't quite see the same value prospect as Chris does.
Okay.
I mean, trading at 16 times earnings, it is a discount to itself historically, but the company has changed from being a growth tech stock to being a mature financial company. In that respect, 16 times earnings is kind of fairly valued, and there's no dividend yield. So people looking for a financial stock will probably want to look somewhere else. People that want to play PayPal for its tech and its growth may also wish to look somewhere else.
Okay, well, as you mentioned, mark your calendars. February 7th, PayPal is going to release its earnings report. Is there anything else with this that we need to be looking out for?
I think the report is a potential catalyst. The analysts have been raising their targets. They're expecting growth to slow a little bit, but still remain pretty steady in the mid-single digit range. Like Chris said, there's a chance for outperformance. Even just steady performance could be enough to get the market to bottom. And bottoming is a start.
Yeah, I mean, I think if you're not in the stock right now, I don't think there's a hurry for you to get in. And if the stock does start to move, you'll have time to get in on it. I would say it's probably a watch list stock for you. Okay. The bigger question is, what do you do if you actually own the stock right now?
All right, well, there you have it. Stay tuned for more updates on PayPal right here on this channel and on MarketBeat. Let us know what analysis you want to see next. Until then, if you found this video informative, please let us know down below. Don't forget to subscribe. We'll talk soon.